The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 28th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call a person can fail many times, but we aren't a failure until we begin to blame others. Have you ever heard the statement, if you're going to learn anything, you will make mistakes? Well, it's absolutely true. Sometimes we refuse to try new things because we're afraid of failing and therefore becoming a failure. But there's a huge distinction between becoming a failure and failing. Few things, folks, few things are learned in life without failing at least once. At least once out there. Question, how many times did it take you to learn how to ride a bike? How many times did you fall out there? Did you learn how to ride a bike on your first attempt out there? If you did, you certainly would be one of the few out there. And likely what happened, like myself, like most of us, you wanted to accomplish that goal of riding a bike so much that you put all those failed attempts behind you. Now, there may have been a moment or two when you blamed the person who was teaching you. Maybe it was your mother. Maybe it was your father. Maybe you thought that they let go too early or they let go too late. You know, in life, folks, it sometimes seems as if there may be someone or something that causes us to fail. But there is no one to blame but ourselves. That doesn't mean that we live in self-pity. Remember this, folks. We can fail many times, but it does not have to be final. Those who fail are not failures unless they blame others or wallow in self-pity. Success, folks, success is right around the corner of failure. Get back on your bike and go have the ride of a lifetime. Let's go take a look at the ride of a lifetime in these markets here. We've got the futures up. Dow futures up about 35 points, trading out at 13,847. The ES Mini trading at 14.99 right now. That's up about 3 points or so. And the S&P cash should open up a point right now. NASDAQ futures up 3.5 as well. Russell 2000 up a bit. King dollar back 2 ticks, trading out at 79.79. The euro pretty much flat up 10 ticks right now. The Japanese yen down 9. It's the pound that's getting pounded. That's down 59 ticks, trading out at 157.36 in the currency market. We'll certainly go take a look at the pound and see what's going on out there. Gold pretty much flat this morning, down a buck, trading out at 16.55. Silver down 15 cents. That's about 0.5% down, out at 31.05. Light sweet crude out at 96.92. Up 74 cents out there. Looks like light sweet crude wants to go visit that $100 mark or so. Natural gas back 12 pennies right now. Natural gas breaking out of that rising price channel. We'll go take a look at that as well. And you can always give us a call at 877-927-6648. Would love to hear from you. Hear how your weekend was. So let's start out by taking a look at the daily chart of the ES Mini, of the S&P futures contract. If you're watching us on TigerTV, you're able to see the patterns that I've got on my screen. Maybe you're listening on the radio. Maybe it's your mobile device at tfnn.mobi. And if so, you can always catch an archive of this show on Channel 9 on Tiger TV. And hey, folks, don't forget, today, right now, right here, right now, begins our Great Panther Silver Giveaway. If you haven't signed up, it's not too late to do so. But for the next, through Friday, we're going to be giving away $1,000 or so worth of silver out there. It's real easy. Go over to the homepage at tfnn.com. Just simply click on the Great Panther Silver giveaway. Enter your name. It's really a quick process. In fact, we've got a winner out here. We've got Richard from Marblehead, Massachusetts. Not able to get on the phone with us. He's going to try to call a little bit back later. Maybe he'll be calling during the this next hour here, or perhaps later on. But we'd like to be able to give you the gift of silver. So go to the homepage at tfnn.com and sign up for that as soon as possible. Now, as we take a look at the ES Mini on the daily chart, you're seeing really a thing of beauty with regard to patterns out there. If you believe the patterns repeat in life, then we're near a point where we're going to see a reversal in the markets. Are we going to see it right now? Maybe not, but we're going to see it. It's very close. If we take a look at the 1.272 butterfly, and I'm going to go ahead and blow this up on the screen, and we can always back it off. We're taking a look at the coming swing point of September 14th. This is on the ES Mini. The price out there was $14.68. From that high down to the low that was put in here, down at the November 16th level, that was at $13.40. If you subtracted those two amounts, multiplied that times 1.272, added that to the bottom, that means the 13.40.25 level. That would take you right up to about 15.03. In fact, let's go see what that exact number is. I'm just simply going to go ahead and use my retracement and expansion tool. That'll actually give us the exact number out here. Well, it's right there, really, where we're at about the 15.03 level. Now, this morning we had the ES Mini get up to 1,500. Even, Stephen, out there, I suspect it'll move just a little bit higher into that 15.03. The key here is waiting for a reversal signal. We don't have that reversal signal yet. We might get it. We can see here that on the ES Mini, it's up towards the upper level of that relative strength indicator. It's right now at the 69.51 level. You can see as the lows were made here back in November, down at the bottom, down at the 29.30 level, 29.30 and 33.99. If you take a look at the last time, back to September 14th, what we saw was the ES Mini on the RSI, as was also making a 1.272 butterfly out there. That's the yellow pattern, or it should be about yellow as you take a look at it on the screen. That was the last butterfly that was out there. That was September 14th's high. You can see that the RSI up in that 73 level. Pretty cool, huh? How that works. So you get up into what? Overbought condition. Says be careful. You're getting the overbought condition. You're completing a 1.272 butterfly. Now what's key is waiting for a reversal signal. Can the market move higher? Absolutely it can. The next level, if we were to bust through here, would be that 1.618 expansion. If we go back and take a look at that, that's the expansion of September 14th down to that November 16th area. That would actually say 1546 would be the number. But if we go back and we take a look at how the market has responded here, I'm going to go ahead and pull this chart back even further. Take a look at the other 1.27. Didn't make quite a 1.272 butterfly, but it did make an expansion. The price did move into the overbought condition. This is going back to the April 29, 2011 high, down to the low that came in back in October of 2011. Made about a 1.128 expansion, very close to the 1.272 expansion out there. You can see the market also getting into that overbought territory. That is a beautiful thing. As I pull this back, we're taking a look at expansions, and these are all coming off of the March of 09 level out here before you saw market reversals. So I think, folks, we're seeing patterns out here. We're seeing patterns that repeat themselves, whether it's expansion patterns, butterfly patterns, oversold to overbought conditions out there. I say keep your seatbelts on, because a reversal is absolutely imminent out there, whether it's going to be right up here at the 1503 level or whether it's going to power on through to that 1.618. I suspect, based upon past patterns, we're going to see that take place very soon. We had a new moon come in on Sunday, really came in at about 11:39 East Coast time, and we had Saturday was also a 4 planetary index date. So we're completing patterns here. We're also completing on the charts. We're also completing patterns up in the sky. As we go take a look at other markets, I said the pound was the currency that was getting pounded. So let's go take a look at that currency pair. This is the U.S. dollar, the Great British Pound U.S. dollar currency pair. Got really the same chart up on the screen, just using one indicator here. We'll put some others as we take a look at it. Number one, as we take a look at relative strength, what can we see here on the Great British Pound? Getting into that oversold territory. Getting into oversold as it did overnight and this morning here as it tested an area of support. This is an area of support. This is the black horizontal line coming across my screen. We're really dealing with the highs of about the June 20th level, out in the 150, out in the 1.5777. That's the James Bond number. 15777 out there on June 20th. You can see that level was tested on July 27th as well, out at 1.5767. You've got the Great British Pound traveling below that area. Once you break through a area of support, what happens to it? It becomes resistance. A lot of time left in today's trading session. If we go take a look, you can also see a descending trend line here, just simply coming off of the high back on September 21st. That would be your first touch point, using the high there. And then the second high that I use here is November 1st, the Great British Pound traveling below that. But if we go take a look at retracements, let's go take a look at retracements from low to high. We're going to start off here down as the market, as the Great British Pound got into that oversold territory. That was on June 1st. We're going to go from that low at 1.5267 all the way up to the highs that were put in here. This was on January 2nd as our market had liftoff. Mission Control, we had liftoff on January 2nd. The pound here started its move down. It had made its high and started its move down. The 0.618 level, not that much further below, 1.5678. I suspect we will see the Great British Pound get down to that level, but it is nearing a point where we should also begin to start to see a reversal in the Great British Pound. As we go take a look at the other currencies out here, as long as we're in the currency section of my charts, if we take a look at the Euro US dollar, the US dollar currency pair, what we will see here, give me a moment to pop this up on the screen. You can see the Euro U.S. dollar currency pair doing what? Making 100% move of a move. This is taking you back to an area, a cluster area of swing points that goes back into the February 2012 time frames. The euro here has pounded up through that. It makes sense that it would stop there. It's busted through other areas of support here. I'm going to go ahead and delete those because those no longer, of course, you could say those become resistance areas. Those now become support. But as we take a look at this, if the euro is able to punch up above, if it's able to punch up, and this is what you bulls want to see out there, any bulls want to see out there, 1.34853. You want to see the euro pound up through that, preferably with a wide-ranging candle. What will that do? Well, that will go ahead and weaken the U.S. dollar, likely put some energy in the markets out here. I suspect that's not what we're going to see, but the next level on the euro would be the 0.618 retracement. That's coming off of the highs back from May 4, 2011, all the way down to the lows in July of 2012. That number, 1.38319. If we take a look at A to B equals CD, I bet you we've got a pattern that's completing right up in that area as well. 1-to-1 A to B equals CD, just underneath it at 137,913. Our call-in number, 877-927-6648. Congratulations, Richard, in Marblehead, Massachusetts, our first winner in the Great Panther Silver Giveaway. Go sign up, folks. Do it now. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and let's go out to Marblehead, Massachusetts, out there to our man, Richard. Richard, thanks for calling. Thanks for holding. How are you doing today?
Hey, Steve. Good. I appreciate the giveaway there, and I guess I was the first winner.
You were the first winner. That's a great way to start your Monday out there.
Yep.
Now, Marblehead, that's a beautiful place. How long have you been in Marblehead?
Basically all my life, but, right now we're in the dead of winter, of course, and I was telling Tom Jr., I think it was there, that we've been skating on the pond all weekend. We've had some nice winter weather and got some time outside.
Oh, that's great. Now, when Hurricane Sandy came in, how did it affect your area?
We were not really affected too much. It was more south of here, and it wasn't.
So no, the
bad
storm
overall.
surge and so forth did affect the beaches, or?
No, some minor coastal flooding, and up in the Plum Island area, they've had some deeper issues than here. But
oh, that's great. That's great.
So yeah.
So how long have you been?
Oh, go ahead.
Yeah, you bet. How long have you been a listener at TFNN?
Good 5 years, anyway.
Oh, that's great. How'd you find us?
I found you on the AM station up here in Boston. I think it's now 1220 or.
Oh, that's great. That's great. Well, look, we appreciate you. We appreciate your listenership. you being a Tiger, going over to the homepage at TFNN.com and signing up, and congratulations on being our first winner in the Great Panther Silver Giveaway. Have a great day, a great week, a great life, a great month, a great year, okay?
Steve, can I ask you one financial question now?
You can ask anything you'd like.
Tell me about where do you see the financials going this week, and in particular the FAZ?
The FAZ. So the FAZ, you're looking to go short.
Yes.
Okay, so if we go take a look at the financials, we're going to really base it off of the XLF. So give me just a moment here to pull up the XLF. And what we're taking a look at, the XLF, now that's been the strongest sector inside the S&P 500. So I'm not sure that that's the one that I would be taking a look at going short. I would be looking maybe for a weaker sector, perhaps like the XLK, maybe the XLE. But to answer your question, the financial sector finished out at 1747, and it got above an area of what should have been resistance, which was the swing point going all the way back here into the February time frame. Let me see here. The exact swing point date was 1720. It was on February 18th, and that February 18th level had 32 million shares. Now, it got up above that area on lighter volume, both above that level as well as the downdraft that took place on the next trading day with 102 million shares. Your real test is going to be as it comes back and it tests that line of 1720. If it comes back and tests that with less than 32 million shares, or in order to go short, if you're not short, you would want it to get back inside the lower part of that range. And ideally, what you would like to see here, Richard, is you'd like to see it get back below the high of $17. That's the February 22nd area where there was a downdraft with 102 million shares. That would be the place that I would be targeting. But so far, what we haven't seen inside the XLF, just like the other ETFs or the indexes or the futures contracts, we have not seen a reversal candle. And there's no way that this market starts down without at least showing its cards and giving us a reversal candle. So the financial sector absolutely bought out here and extended. But, Richard, it is one of the stronger of the sectors inside the S&P 500. So be careful. You might be skating on thin ice out there.
I appreciate it.
You bet. Thanks for calling. Have yourself a great day.
Bye
All righty. You bet. Let's go take a look at, we had a couple of companies out with earnings before the bell. Two specifically, we had Biogen, BIIB is the ticker symbol. Their last trade just fired off here at $148. They closed at $146.20 on Friday. Total revenues of $1.4 billion versus $1.3. They did earnings per share of $1.23 versus $1.22 out there. They did, what did they do income-wise? $1.3 billion in income versus $1.23. You got to love it out here. As we take a look at Bib, we also had Cat out with earnings. Caterpillar, they closed at $95.58. They're putting a little bit of juice inside the Dow right now. Last trade just fired off at $98.19 out there. Their earnings there, I think they're guiding a little bit lower. Their earnings here, let's see. We'll come back to their earnings. Profit was $697 million versus $1.5 billion a year ago. But let's go take a look at the stock charts here. As we take a look at, we'll start off by taking a look at Bib. Actually, we're going to have to do that when we come back from the break. What is Bib trading into? Bib is going to trade into this area here right above the last swing point, which is from January 2nd. That was a high of 150.98. Looks like that's where it wants to trade right into before it gives us information. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 9 points right now. Composite up 4. S&P flat, down 57 cents. Small caps, Russell 2000 trading out at 905.96, up 72 pennies. Google down 4 cents. Apple up 50 cents. Microsoft up another 4 ticks out there. Intel up 7. You've got Cisco up 5 pennies, leading the charge to the upside and downside. Well, my system here isn't giving me great data here, so we're gonna skip that. Let's go take a look at we were talking about BIIB. As we were coming into the market open here, we can see it's moving up nicely. Said it was going to go ahead and tackle the swing point from January 2nd. Decided to not just tackle that, but tackle the actual swing points out here from the highs of September 26th. That swing point high, 157.18. It got up to 156.93. Got over the most recent swing point high, which was December 11th. That has 1.2 million shares out there. It's got volume already today, 490,000 shares, but not trading up at its session highs just yet. The BIIB is what we're taking a look at. Biogen. Let's go put this on a weekly chart, because as a chart goes, this is looking pretty good. You've got everybody basically in this equity is, for the most part, in the money. That is certainly what you like to see. So BIB is going to try and break out above its next swing point high. That is that September 28th level. Volume on the weekly chart. Now, the problem here with this stock chart is you take a look at any stock chart. When you first pull up a stock chart, one of the things that you want to do, or the first thing that you want to do, is go identify the high volume bars out there. And what you like to see, you'd like to see some kind of high volume bar not too far behind where price is traveling right now. Well, if we take a look at any high volume bar out here inside Biogen, boy, it's all the way down at a price point of 103.53. If ever these guys have a bad news, something that comes out, that is the level that Biogen would travel back to. Always make sure that you've got your stock. I'm not saying that's where it's headed to, but that is something, if you're in a stock, you want to make sure that you're paying attention to where that high volume bar is. You like to see something up a little bit higher than that. It does have a little bit of volume out here on the week of October the 28th. That level would be 120.66. That might be the first level where you would find some support out there. Biogen, BIIB, trading out at 151 right now. Let's go back and take a look at the sectors out here with inside the S&P 500. So we were taking a look at Richard, who was our first Great Panther Silver giveaway. We were looking at the financial sector. Now, the cool thing about the financial sector, as I mentioned to Richard here, until we see a bearish candlestick, you're not going to see a reversal. The bulls and the bears, they can't hide. That's the beautiful thing about candlestick charting. Now, as we take a look at the candle that was that we had in the XLF on Friday, one of the things that we're first going to see is here is that if you take a look at the session close and open, what do you see here on the daily chart? In fact, let me go ahead and open this up a little bit. That's right. It's a doji candle. You had the XLF open at 1747, close at 1747. So it becomes very easy for it to create a bearish engulfing candle. You just have to have today's session engulfing the close of Friday. Now, if we take a look at the financial sector, what we're going to see is today's high thus far is 1750. The high from Friday was 1748. So here's the deal. Here is the deal to be looking, because you want to be able to be looking at strength. As we pointed out during the opening segment, we were taking a look at patterns that were completed. And by the way, I apologize. I was thinking full moon. Apparently, I said new moon. Coming in at 11:39 in the evening, Eastern Standard Time, was a full moon. And it was a beautiful full moon, something to be howling at. In fact, it was really nice in the western sky earlier this morning out there. But here's what you want to be paying attention to as these patterns are completing. Today, the XLF, one of the strong hands in the marketplace, if the XLF closes below, or trades today, doesn't have to close below. If it trades today, intraday, below 1736, closes somewhere right around where it's at right now, you'll have had a key reversal day. A key reversal day, folks, occurs when you've got an extended condition. Well, there's absolutely an extended condition in the marketplace as far as being overbought out there. You've got the, in this case here, you would also be closing in the opposite direction. The opposite direction, meaning a low, meaning a reversal signal out there, and you would be exceeding both the high and the low of the previous candle. That would be a key reversal day. That, folks, would be a signal out there that the market is ready to begin its pullback. You have the bearish engulfing that's formed here right now. You have to tune in at 4 o'clock during Tom's show when he'll come back and he'll take a look at the XLF out there. But you do want to get your signals from the strong hands. And then, if you were to take a short position, you want to start taking a look at the weak links that are out in the marketplace. So that is on the XLF, and that was for our first winner. That was for Richard. That was giving him the full analysis of the financial sector out there, the XLF, because he was looking at, or is in, the FAZ, which is the triple for the financial sector. Now, the FAZ, I believe, is the financial sector for the Russell 1000 out there. So it's a little bit different. And what you want to make sure that you do is you want to make sure that you go over to the direction shares area, and you want to click on the FA. I believe you have to click on FAS, which is the long position, and it will go ahead and give you all of the weighting structure and the holdings with inside there. It's very close, very similar to the XLF, but go take a look at the if you are trading the FAZ, take a look at the weighting structure and go take a look at those individual equities in order to be able to get a better and identified feel for what's happening with the underlying instruments inside that index. So, where are we now? We're at the energy sector, the XLE. Had a call on Friday, taking a look at the XLE. We were taking a look at that September 14 swing point. Not that far away from the close of Friday. The XLE, that high was 77.35 out there. 15 million shares. As we were taking a look at it, the first thing that we noticed was that as the XLE came up into that area, was doing it about 50% of the volume. We're taking a look at the session from Thursday, 8.8 million shares as it got up to 76.79, closed back below the September 14th swing point. It closed, I apologize, closed back below the swing point going back to February 24th. Of 2012 out there. Now, as we take a look at the XLE today, getting up to a session high of 77.18. Very close. Right now, that candle would be considered a dark cloud cover. Again, the same thing. We'd want to be taking a look at the energy, whether you're bull or bear, doesn't matter. What you want to do is you want to use the candle signals to help you identify when a reversal is likely imminent or is going to be taking place. So the XLE, you'd love to be able to see it go test that September 14th high. Again, that price is 77.35 out there as price came in on Friday. Again, 50% of the volume. So it's lighter on volume. You're coming in there. It didn't get all the way up and test that level. The September 14th low or the swing point there is 76.02. Same real setup here today with regard to a key reversal. You can see the XLF popped up, or the XLE, I should say, the energy sector popped up a little bit this morning, actually opened at 77.18. That was above the session from Friday. So a key reversal day on the XLE out here would be intraday to trade below 76.41 and get a lower close today. That would give you a key reversal day in the energy sector. As long as we're inside the sectors, let's go take a look at the technology sector, the heaviest weighting inside the S&P 500. As we take a look at the energy sector, now the energy sector here really does have a confirmed A to B, not the energy, the technology sector. I apologize. I'm thinking one thing and saying another and confusing the heck out of you. I won't let that happen again. If I do, just buzz me. Just tell me. So we're taking a look at the XLK, the swing point out here. Now, here's what we know about the XLK. Let's go ahead and bring this down. We know that we've got competing islands out here. So you got this little island reversal pattern out here in the XLK. Same thing in the Qs, and that is the island that began here, coming down and gapping down off of the December 20th level. Gaps down. The high on the 21st out there is 28.99. The low of the prior session was 29.17. So it trades in this area here for a bit all the way into December 31st. Of course, we know January 2nd, big day in the markets. You get a gap up inside the tech sector, gaps up with 15 million shares out there. Now, what happens is you get this little island reversal up here at the top. This is the trading session from January 23rd. Inside the Qs, inside the NDX 100, we know that it's the most difficult, one of the most difficult patterns to create out there, which is an abandoned baby top. Very close to an abandoned baby top here in the XLK as well. So we've got competing patterns out here. Which island is it that is going to win? And quite frankly, we won't know here. We won't know this island here with regard to the island reversal up at the top on January 23rd. You get price points that move up into the lows of 29.70. Then I would say that what is going to be the island that is winning is going to be the one out here at the lows. The problem with the XLK, quite frankly, not giving us much of any information out here. With the struggles that Apple has had, and Apple's up $4.42. We'll go take a look at that stock chart here in a bit. With the struggles that Apple's had, the technology sector, the XLK, has weathered the storm pretty darn good. And this is one of the weaker sectors out here. So it's the strong sectors we're looking for from signals, because the weak sector, quite frankly, isn't giving us a whole, or isn't at least giving me a whole lot of information. If you take a look at relative strength, it's right there at the center line, right about the 50 level. So that, too, not providing us with a lot of information. As long as we're in here, because we don't do this too often, let's go take a look at the XLU. That's the utility sector. Let's go see what this is doing. The utility sector out here, up and above its most recent swing point. That would be the December 18th level, 10 million shares. That price is 36.07. Let's see if it took that swing point out with volume, because that would have been Friday's session. Friday session gets above it, but it does it on lighter volume. Does it on 8 million shares. 8 million shares going against 10 million shares. You do not have a confirmed A to B equals CD pattern out here. That is in the utility sector. Let me just refresh my screen, make sure we've got all of the active data out here. We do the utility sector trying to get back inside the lower part of that range. That is at the December 18th swing point out there. Let's go take a look at some of the other sectors. Let's see. What do we have? We've got the XLB. That's the material sector. So as we take a look at the XLB, oh, look at that. How about that? The XLB, folks, completed a 1.272 butterfly pattern. That coming off of the September 14th swing point high. That high was $38.57. Makes a low coming into none other than November the 16th out there with 8.7 million shares. That 1.272 pattern here really completing as it was making a little wide-ranging bar, miniature wide-ranging bar on January 22nd, moved up with 8 million shares out there. As we take a look at the actual X point of the 1.272 butterfly, what we can see is you did have some good volume in this on January 24th. So it exceeded that. You had 11 million shares out there. With the materials sector, I'd feel comfortable here if the materials sector closes below. I'm looking at the candle of January 24th. I would say if it closes below the open 39.50 out there, that would be giving you a candle signal that it is time for reversal. So you're taking a look at patterns, extended patterns. We're taking a look at reversal signals that may occur today. If they are going to occur here soon, and that's really what you want to use as your trigger. In my opinion, that's what you want to use as your trigger, because the bears, they can't hide themselves, they can't disguise themselves, and it makes it a little bit easier to trade out there. Let's go take a look here at a couple of charts. We were taking a look at BIB earlier. Let's go take a look at Caterpillar. Caterpillar out with earnings earlier. So let's go see what Cat is doing. It opened up. Right now you got a little doji. The Caterpillar is trying. Let's take a look and see if Caterpillar here has gotten above its swing point. And is trying to create an A to B equals CD. The swing point we would be using out here looks like September 19th. That high is 94.23. We've got 94.20. No, it's 94.28. It is going to be September the 14th out here. Let's go ahead and draw lines across so that we can pay attention to this. Let's take a look at the volume. And this is really what you want to do when you're playing the home game on your charts. Go to that B point, draw a line across so you can see if it crossed the B point with volume. And as we take a look at Caterpillar, it came into the swing point with volume on January 2nd, got up and rejected that area, but got up with 11.6 million shares, going into 11.3 million shares. Didn't close above it with volume. In fact, it is above it on lighter volume. If we take a look at expansion, so now let's take a look at the September 14th expansion down to the low that was put in here on November 16th, and what it has done today, it's completed that 1.272 expansion. That was in the 98.12 level. You've got Caterpillar trading out at 97.91, so you do not have a confirmed A to B equals CD up. That would be the larger one coming off of the July 12th area, but maybe we've got an intermediate one, and that would be taking a look at the December 19th swing point. That has 7 million shares. That most certainly is a confirmed A to B equals CD up, as the January 2nd level took out that swing point high from December the 19th, did that with volume. So let's go take a look at the completion of that A to B equals CD, and I'll come back and I'll give you those. You can see that's what it has done so far today. So it has completed basically what this is doing, this too, setting up a 1.272 butterfly sell pattern. Now, what is important to take a look at here, as you take a look at the swing points I'm looking at, folks, so I can give you the A to B equals CD, you're looking at the low of November 16th, 80.16. You're taking a look at the high of December 19th, 91.83, 7 million shares. Pulls back, does probably a 0.382 retracement down into December 21st. A to B equals CD, price point of about 98.43. What did it hit today? 98.74. A 1.272 butterfly inside Caterpillar. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow down 3 points right now. Composite up 6. S&P off 2. Russell 2000 slightly negative, down 58 cents. And I want to go back to Caterpillar here just for a moment. We were taking a look at that 1.272 butterfly. If you are watching us on TigerTV, that is the light blue area on the screen that you are looking at out here. And again, that a second here, hit the wrong button. That was going back again to the off of the swing point from September the 14th out there. What we also have is we've got another reversal pattern that Caterpillar also is completing today, and that is a 0.618 Gartley cell. So it has a 1.272 butterfly cell. It has a 0.618 Gartley cell pattern, and that is coming off of the swing points from April the 19th out there down to the swing point low of July 12th. If you'd like to see what those patterns look like, just go to the homepage of TFNN.com, click on Tiger TV. The show will be up on its archives later on this afternoon. You'll be able to take a look at this pattern. Let's go to Al, just down the street in Tampa. Al, thanks for calling. Thanks for holding. How are you today?
Great.
Perfect. You wanted to take a look at Apple. Tell us how I can help you. And
well, you had mentioned, I believe last week, that you saw Apple with a target of 343, I think.
Okay. Yeah. Yeah. Go ahead.
And do you have a time frame for that kind of price?
No, there's no way to the 340 level, and what I'm doing, folks, I'm taking a look at the A to B equals CD down. So we know we've got a confirmed AB equals CD down pattern, and what Apple's doing right now, it's resting in a spot where there was a little breakaway gap, and that's in the January 25th level. So it's trying to test that area. Hasn't gotten down to the January 24th high, which is 425.10 out there. But the reason why I say 340 versus 395, 395 is first level. 395 would make a 1-to-1 A to B equals CD down. However, the retracement, the first retracement on Apple is the first big clue out there, and that first retracement was just above a 0.382 retracement. When you see that occur, the majority of the time, what it will tell you, Al, is that Apple's going to make more than a 1-to-1 A to B equals CD down. So your targets to be looking at are first going to be watching it as it breaks the January 24th gap and closes that gap. That's in the 419 to 425 level. Breaks that, it'll head down to about 395. That's your 1-to-1. And I suspect where we see Apple end up making a low is probably right around that 340 area. Now, Apple on the daily chart has absolutely gotten into the oversold territory, and candlesticks will tell us whether or not there's going to be any kind of significant reversal here. Are you short Apple? Are you looking to short Apple? Tell me what you're...
I'm short Apple.
You're short Apple, okay. The problem with the time frame, I can tell you that just the A to B equals CD would give us a time frame here in the 1 to 1.272 would take you into the middle of February. So, but that is just really more of a gauge. What will give you the signals are going to be the bulls and the bears, the signs, the candlesticks out there. Have you been short for a while, or did you just get in on the short?
I've been short since December.
Since December. Okay. Well, that's great. So you're in a good trade out here, and no reversal signals. You do have Apple trading up about $8 right now. No real volume necessarily behind it so far today. Well, not bad volume, 6 million shares, but it's going against a volume of 52 million shares from January 24th out there. So I think you're in a good trade, my friend.
Mm-hmm. The January 24th, that was of 2012.
That was January 24th of 2012. Thanks for calling, Al. We're out of time here. Thanks so much for tuning in, folks. Stay tuned. The Money Masters Show will be up next. If you're off to start your day, have a marvelous Monday. Look forward to seeing you tomorrow morning. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today. because your journey to extraordinary rewards is just one click away.